we are going to talk about the difference between whole life insurance and term life insurance. Hello, everyone, and welcome. My name is Paul Zimney. I am a certified public accountant, or a CPA, and am a licensed life and health insurance agent here in St. Louis, Missouri. Today, my partner, Shannon Carpenter, and I are kicking off a new series for 2024. It's Your Life. This is going to be an ongoing series. We will examine and share with you ways you can improve your life, improve your family's life, and your legacy. So why are we doing this, and why is this important? Well, to answer that question, I'm going to turn it over to my fast talking and fast driving partner.
Sure. And my name is Shannon Carpenter. I'm a nationally licensed financial advisor. I'm based out of Kentucky, and I do specialize in life, health, Medicare, and retirement. So retirement has kind of become my big thing. You know, we've got probably 100 agents. Most of them handle the life and the health and the Medicare. And then there's probably 4 or 5 of us that really focus on the life insurance retirement planning. So to answer your question of why we're doing this, I think number one, most people don't really know what life insurance is about. I think our country has kind of brainwashed people into thinking that life insurance is what happens when you die and your wife gets a check. And that was originally supposed to be a byproduct, right? Just a bonus feature, if you will, of life insurance. Otherwise, I think they would have called it death insurance back in the day, if that's what they intended it to be used for. But life insurance has a ton of different purposes that people don't know. They just think someone dies, someone gets a check. Also, a lot of young people. I talk to a lot of people that are, I'm talking between 20, let's say college age, I'm going to say kids, sorry, but college age kids that say, well, I'm too young to get life insurance. I don't need it. I can wait till I'm old. I can wait till before I die. And I always ask them, what's your birthday? And they tell me, I'm like, great. What's your expiration date? Well, they don't know that because things happen. If something happens too soon, it's funny. I just made a TikTok about this just today, that a lot of people that are young that don't get life insurance, they know that when they die, their student loans die with them. But what if their parent co-signed? Their parent is on the hook to pay their student loans if they pass away. So that's a huge reason right there that young people should have life insurance, plus just the fact that the rates are locked in and cheaper, right? If you're younger, I'm going to pick on you, Paul. I'm a little bit younger than you. So my rate, if I signed up today, would be a little bit cheaper than yours, right?
I understand.
Imagine if you signed up when you were in your 20s, how much cheaper would it have been? Also, when you look at it from a LIRP or laser, which is life insurance retirement planning, or Doug Andrews calls it the laser fund, liquid assets safely earning returns. When you look at it from that aspect, if you're younger and you put money into a 401k versus a life insurance retirement planning, you're going to get more gains. You have access to the money. There's no taxation. There's all kinds of reasons that LIRP would be a traditional, let's say 401k, IRA, Roth, something like that. So, and it's good to have you on here since you're a CPA and you understand all that stuff because, taxes make my head hurt. So anyway, I ramble enough. Back to you.
Okay, very good. Thank you, Shannon. Okay, so today for our first podcast to kick things off, we are going to talk about a very important and oft misunderstood topic or concept, and that is the difference between whole life insurance and term life insurance. I've been in the insurance business for around 12 years now, and it is amazing to see how many people, young and old, middle age, it doesn't matter, who are very fuzzy on the differences between whole life and term life. It seems nobody really understands one of the most basic concepts in life insurance. So I'm going to go through some bullet points and point out, and then I'll let Shannon comment thereafter. So first of all, let's talk about term life, okay? In both of these types of life insurance, it's the answer is mostly in the name, okay? So term life insurance means there is a limited term on that product. It will terminate at some point. You hear people talk about, I have a 20-year term life insurance, a 30-year term policy. That means that in that 20 or 30 years, if you don't use the policy, in other words, you outlive the 20 or 30 years, that policy is going to terminate and you will no longer have a life insurance policy of that nature. Okay. Also, on average, term life has a lower cost per unit of coverage than whole life. Okay, that's important. So that allows higher face values for new applicants, for new policyholders. Term life is great for younger people typically, especially those who may have to replace income if they were to pass away suddenly, may have to pay off a large mortgage. The term life is excellent for a younger family. Also, getting young kids through school if the breadwinner or breadwinners were to pass away at an early age. Okay, switch to whole life. So again, in the name, you own the policy for your whole life. It does not terminate. So when you take out a whole life policy, you have the confidence that in 20 or 30 years, it's not going to go away. You will own it. You will use it because you will pass away. Also, usually lower face values because the higher cost, again, per unit of coverage accounts for that. Whole life is good for all ages, but especially we see more whole life in middle age and older people because it's generally a great product for making sure that funeral costs, that final expenses, leaving some money behind, all of those things are taken care of, which people are thinking more about, obviously, as they get older. Also with whole life, it is somewhat easier to get approved than term life insurance. And I think that's in part due to the lower face values. So those with some, more serious health conditions are generally going to have an easier time getting approved for a whole life product versus a term life product. And then lastly, with whole life, there are generally a number of additional benefits that you can obtain versus term life. A couple of examples, whole life builds cash value. And we're going to have another podcast on just that aspect of whole life upcoming. But when you hear people talk about, oh, I borrowed from my life insurance policy, you'll hear people talk about that. Well, they're borrowing from their whole life policy, not their term life, because the term life does not have that capability. And then another example of additional benefits with whole life, in some cases, not all, but in some cases, they include living benefits, which means they will pay monies out to you while you're still alive if you go through something like a terminal illness or a chronic or critical illness. So I hope that guides you well in terms of the distinction between the two. Remember, term insurance, term life insurance is going to terminate. Whole life insurance, you own that for your whole life. All right, back to you, Shannon, to wrap things up.
Well, I made some notes, and it's kind of funny because we were trained at different places, but we kind of say the exact same thing. I always tell people, just to make it easy, think of it this way. A term policy covers you for a term of your life, a 10-year term, a 20-year term, a 30-year term, for example. But whole life covers you for your whole life. So a couple other things to add is, like I like Dave Ramsey. I used to work with Dave Ramsey doing the Financial Peace University thing, but Dave Ramsey says buy term and invest the difference. Well, what if you don't qualify for term? And one of our podcasts coming up, like you alluded to, we're going to talk about how to buy term and invest the difference using the mutual whole life. I'm guessing is what you were talking about, infinite banking. We're going to get into all that. But I have people say, well, I don't need life insurance. And I ask them, well, why do you think that? And, because everybody dies. Even Jesus died. Like he rose again on the third day, but he did die, right? So the reason whole life is more expensive is because it's a guarantee. You are going to die. Someone is going to get a check, and we can guarantee that. Versus with term, it's kind of like Vegas. The house always wins. Term policies don't pay out 99% of the time because you outlive the policy. you outlive that 20 or 30 years. So like you said, it's better for younger people. I see a lot of people that are 24 that just got married. They've got a new dog, a new baby, a new house, a new boat, whatever. And if one of them passed away, the other one could not afford all of those things. They would have to uproot these kids and move into a smaller house, downsize, get family to help, whatever. It would totally change their way of living. And that's when a term policy is really, really important, because you can get $1 million of coverage when you're 24 for less than $100, right? With, most people, obviously it depends on your height, your weight, your medications and all that stuff. But for the most part, that's when I look at using a term. But the cycle people get stuck in is they do, let's say, a 30-year term policy when they're 25 years old. 25 years later, they just go, well, I just need another cheap term policy. Well, eventually they're going to cut you off. They're not going to give you another 20 or 30-year term policy, because they know the mortality rates. They know that, the average age of death in our country is 76 for a man, I think 82, something like that now for a woman. They know that that's the average age of death. So if you're 70 years old, they're not going to give you a 20-year term policy. Plus, your health may not be that great. You may not qualify. Like you said, the term is a little harder to get qualified for, because they're on the hook for more money. If you sign up today, die tomorrow, and you got a $300,000 policy, that company got one premium payment of, let's call it a couple $100 or something. And now they have to pay out, 300, 400, 500,000, $1 million. That's a big hit. So it's a lot easier when you're older to get approved for a final expense product or a whole life. So anyway, that's all I've got to add. Back to you, sir.
Very good. Okay. Well, I just want to say thank you all for listening, and hope you benefited from this podcast. Again, this is first in a series. We're going to do this throughout 2024. And again, the name of the podcast is It's Your Life. Take care, everyone.